subscribers. I am Dr. Velavan, Faculty, School of Management, Shastra University. In connection with the previous session, today we are going to discuss about the payment of tax. This is nothing but payment of GST. After adjusting input tax, okay, now we are going to make a final payment. So this is what payment of tax. Okay. Here we have to see section 49 of payment of tax, interest, penalty and other amounts. You see, every deposit by a person by internet banking or credit card or NEFT or RTGS or over the counter OTC by cash, check or demand draft. So here we have to follow the payment ways or internet banking or credit card or NEFT or RTGS over the counter OTC by cash and check or demand draft. You see, before now, once you registered your business, immediately the registration portal display three important ledgers. One is electronic cash ledger, and electronic credit ledger, the last one is electronic liability register. So these are the three important ledgers are opened when you registered your business. Okay, but you have to transfer money from your bank account to this ledger. It should be either online transaction or NEFT or over the counter transaction OTC or RTGS. So this is what. So you have to maintain one separate bank account in the name of your business. Once you register, you have three different register. You have to maintain three different ledger or register. One is electronic cash ledger, credit ledger, then liability register. You see, once you maintain a sufficient account in your bank account, you have to transfer the money to your electronic cash register. So here you have to maintain the optimum cash balance. So every deposit by a person by internet through credit card or NEFT, whatever it may, check or demand. The limit or OTC 10,000 per challan per period, per tax period, except suppose you use the over the trade count, over the counter choice, you have to deposit minimum 10,000. Others, no problem. You can transfer whatever you need. Okay, everything will be transferred from your personal bank account to this account. Okay. Then, before going to pay tax, we have to classify the taxes into two heads. Okay. Two heads. One is major heads. Major heads are CGST, SGST, or UTGST and IGST. Both are intra as well as inter. This is for major hits. The next one is minor hits. The minor hits are fees, commission, fines, penalty, etc. They are the minor hits. Okay. So here, whenever you collect the CGST, SGST and UTGST, this is for debit because we have to pay CGST, SGST and UTGST. When you claim ITC, here it is your credit ITC. You have to pay all the three from your bank account. So CGST, SGST, then UTGST and IGST. Everything should pay. It should be in electronic credit ledger. It should be adjusted here. The balance will be paid. But the minor heads also will pay from minor heads. Fees, penalty, fine, they will also come this way. But the amount available in the credit ledger is your liability. CGST, SGST, IGST, then UTGST. These are all the payment mechanism we have to follow, my dear students. Okay. So once you register, the following ledgers are opened. It is always available in your portal. So whenever you collect GST, CGST, everything is credited in your bank account, so debited in your bank account. Then you have to pay from your bank account because the settlement through only in bank account. Okay. When you have electronic credit ledger, ITC, you have a credit, so it should be always adjusted against the final date. So this is what payment of tax, my dear student. Okay, you see. But when you use transfer money from your account to the electronic cash ledger through OTC, you have to transfer only 10,000. But in case of government sector, they may transfer up to rupees 50,000 rupees. Up to 50,000 they may transfer. Okay, but not only 50,000, they may transfer whatever may be, except the limit is not applicable for the following: government department, notified persons, any authorization of proper officer to recover outstanding dues, including during investigation, enforcement activity, then any ad hoc deposit shall be credited to electronic cash ledger, then used for payment tax, interest, penalty, fees, any other amount. If any balance after about payment may be refunded. You see, first you have to pay all electronic credit ledger. You have to pay all. After you have any balances, you can use that money for payment of fine and etc. Okay. First you have to pay the major heads. Major heads are, I told you, there are 3 major heads: SCGST, HGST, UTGST, or IGST are major heads. The others are minor heads. Okay, so this is what you have to keep in your mind first. Then the ITC as self-assessed as per return. The input tax credit as self-assessed as per return. How shall be credited to electronic credit ledger? You see, already I told you ITC will be credited to electronic credit ledger, but it has to be adjusted in the following manner. That is very, very important. Used for payment of output tax only as per the order given below. You see, here you assume that you have a GST payable. You have some dues. Okay, you have a liability to responsible to pay GST. You see, these are all the ITC available when you have both input tax and output tax. Before make a payment, you have to adjust all the input tax available in hand against the output tax. Okay, so this is the manner of using ITC. Okay, manner of utilizing ITC is very, very important. You have a output, you see here, output tax payable. CGST, SGST, then ITGST. You have output tax payable. Okay. But you have a input tax, ITC. First, IGST. When you have a IGST regarding ITC, you have to adjust first against the output tax payable of IGST. After adjusting IGST payable, you have any surplus, then will adjust against CGST. Finally, we come to AGST. This is for the order of arrangement of ITC available in IGST. Okay. Suppose you have a input tax credit on CGST. First to adjust against the CGST payable. After adjusting CGST, you have any surplus, you have to adjust against IGST, not GST. Okay. Then when you have SGST or UTGST, first you have to adjust against GST, then adjust against IGST, not CGST. This is for what? Manner of utilization. You see, 1, 2, 3, 1, 2, 1, 2. Yes. This is the manner of utilization of input tax credit. Once you adjust like that, then you pay the ITC to the government. Okay. All liabilities of a taxable person shall be recorded in electronic liability register and discharged the following order. What are all the liabilities you have? Everything you should be adjusted in ledger. SGST, everything. Then GST, CGST, IT, GST, everything, and all fine, penalty, everything will be recorded inside. Then pay the money through bank. So here electronic cash or bank. That's very simple. But you have to settle the money in the following order. Self-assessed tax related to the previous tax period. Self-assessed tax related to the current tax period. Any other amount like the tax short paid or not paid previously, they can also pay during the year. But they will pay after paying the last year due and current year tax, and any penalty and are paid this year. The tax paid deemed to have passed on the recipient of supplement. That is very, very important. Okay, the paid deemed to have passed on the recipient of supplement. So the recipient only has to pay. Okay, this is what the discharge or methods of payment of tax. Okay. Explanation. The date of credit to the account of government in the authorized bank shall be deemed to be the date of deposit in the electronic cash register. The date of credit of the account of the government in the authorized bank shall be deemed to be the date of deposit in the receipt. Tax dues means the tax payable under the Act does not include interest fee. Okay. Here tax due means only the major hits. Major hits, not minor hits. Okay. But does not include interest, they are minor hits. Other dues means interest, penalty, fee, any other amount payable under this Act or the rules made under there. Minor hits. But tax due is only meant for what? Major hits. All the three major hits. GST, CGST and IGST. When you are doing your business in the union territory, here UTGST are applicable. Okay. The payment should be made through challan. Okay. E-challan, electronic focal point branch. These are branches of authorized bank which are authorized to collect payment of GST. Because once you register the business, you have to give the payment bank, which bank is eligible to settle your money or discharge your liability to the government. Okay. So electronic focal point of branch. CPIN, Common Portal Identification Number. It is the 14-digit unique number to identify the challan generated by the taxpayer. CPIN remains valid for a period of 15 days. Once you create a PIN, this PIN will be valid for 15 days. Okay. After 50 days, automatically it will expire. SIN, Challan Identification Number, is generated by the banks once the payment in lieu of a generated challan is successful. It is a 17-digit number, that 14-digit PIN plus 3-digit bank code. 14-digit CPIN plus 3-digit is called what? SIN number, Challan Identification Number. Okay. So all the threes are very, very important. Electronic focal point branch, Common Portal Identification Number, and Challan Identification Number. Okay. A payment should be made by challan only. The challans are EP, EFPP, Electronic Focal Point Branch. These are branches of authorized banks which are authorized to collect payment of GST. CPIN, Common Portal Identification Number. It is a 14-digit unique number to identify the challan generated by the taxpayer. CPIN remains valid for a period of 10 days. So once you create, it should be valid. It is valid only 15 days. Then SIN, Challan Identification Number, is generated by the bank once payment in lieu of a generated challan is successfully. It is a 17-digit number, that is 15-digit CPIN plus 3-digit bank code. So totally 17-digit number they issue. Okay, the bank has issued. Okay, generated. Major hit, I told you that major hits are IGST, CGST, GST, or UTGST, or CHESS. Sometimes we can pay CHESS also. Compensation CHESS is called compensation CHESS. The minor hits are tax, interest, penalty, and others. Okay. So we have to treat separately all the payment. One is for major hits payment and minor hits payment. Form GST PMT09 used for transfer of erroneous deposits under any minor hits of major hits to any other minor hits to same or other major hits. For any of the amount already lying unutilized under any minor hit in electronic cash ledger. Okay. You may have any unspent amount, that amount is also may be used for the pay. Take for example, Kaksha Electrical Enterprises has made a cash deposit 10,000. Under minor hits tax of major hits GST, it has a liability of 2,000 for minor hits interest. Under the major hits GST, state whether The Akshaya Enterprises can utilize the amount available for payment of interest. Yes, can be made. Can be used. Because the unspent amount in the minor heads can be used. No problem. You see, the enrollment deposit of any minor heads of a major head to other minor heads of the same or other major heads. No problem. Can utilize the interest payment against the this deposit. Okay. Section 50. Interest on delayed payment of tax. Suppose you are delaying the payment of tax So now the government has charged 18% interest on your tax paid. Okay. Tax is calculated only the tax paid using electronic credit ledger. Output tax electronic credit ledger. Condition: return in file after the due date as per section 39. So when you file the return after the due date, okay, or after the payment of tax, they will charge 18% penalty or interest for delayed payment. Calculate interest for the period from the date succeeding the date on which was due to be paid in the last payment. Take for example, the due date of tax is 30th September. Example. But date of payment that will go to 31st December. So you charge interest from September to December. So October, November, December, 3 months. Because the due date is 30th September. So September, October, November, December. So last date, payment date 31st. So you have to calculate interest for how many months? 3 months. The maximum interest 25% is payable for excess claim of ITC or underpayment for output. Suppose you paid under output tax or you claim over ITC. You claim ITC exceed your limit. You claim ITC wrongly. So here they charge, okay, they will charge maximum interest rate of 25% because it is your fault. You are cheating the government. So when you claim ITC in excess and when you pay output tax in short, okay, or underpayment, it's your responsibility. So you have to be paid the maximum penalty rate at the rate of what? 24%. Here interest is penalty. Okay. See. Electronic ledgers. Deposit here electronic cash ledger. What are the amount are debited in your account, in cash account, internet by debiting credit in RTC. These are the sources. ITC only is credited in your electronic credit ledger. Then this is the payment deposit. Debited all the balances here. These are the payment. Already I show you. Debited. Okay, all payment. Major and minor hits on your account. Then tax. These are the minor hits. So these are the minor hits. Then section 53 and 18, transfer of ITC. So this is we will discuss about ITC separately. Okay. Now you see, Mr. Ashok, a registered supplier of tax rebates, filed GSTR 3B for the month of January 2020 on 15th April 2020. The prescribed due date to file the set GSTR 3B was 20th February. So due date is 25th February. So you have to calculate interest from 25th February to 15th April. So in February, 21st February, the due date is 20th, so you calculate number of days from 21st February. So totally 54 days will come. Okay. The amount of net GST payable in cash, electronic cash ledger and supplies made by you for the same month is 36,500. So you have to charge interest for that amount. So 36,500 into interest relating percentage. This is a formula, so how much you have to pay? 970 rupees. It was paid in 15th April. Briefly explain the related provisions and compute the amount of interest payable under the GST Act 2005. Mr. Ashok, include the effect of leap year if applicable in the case of because the 20 in case of leap year you have to take 366 days, but for the purpose of calculation interest you ignore the leap days. And what are the provisions here you have to understand? The interest will be charged from the due date to actual date, the date of actual date. The period in between due dates to actual payment, when the payment was made up to the payment we have to charge the interest. Okay. You see, Messrs. ABC Limited have filed their GSTR for the month of July 2020. Within the due date, the prescribed under section 39, okay, 28/2020. Post filing of the return, the registered person has noticed during September 20, the tax dues for the month of July 20 have been short paid of 40,000 of a 24%. ABC Limited has paid the above shortfall 40,000 to GST in September. Filed on 20th 10,000. Payment through cash ledger 30,000, executed ledger and 10,000. Okay. Cash ledger 30,000. Examine the interest payable under GST Act 2007. What would be the answer of GST for the month of July 2000 has been filed belatedly on 2010-2020 and self-assessed tax 40,000 has been paid on 2010-2020. Payment to you see, there exists adequate balance of electronic ledger as under the above shortfall. This is instead of paying 40,000, he has maintained only 30,000. So shortfall of maintenance of balance. No other supply has been made, not tax payable after the 10th July, other than 40,000. So this how he paid on forward charge basis. Okay. Then ignore the effect of leap year. Okay. So interest will be charged only, 18%. This is delayed in payment. This is shortfall in payment. So for shortfall, you charge 24%. In delayed, you charge 18%. Okay. But here, both are delayed. Ignore okay. How much for that? 40,000, 18%, then 30,000, 18% also. Here 60 days, in both cases 60 days would be done. So A has deposited a sum of 30,000 under the minor heads of interest column for major debt IGST. the time of filing GST at 3B for a particular tax period, we noticed that there is no sufficient amount under the minor head tax towards payment of that. So when approached with the jurisdictional tax officer, Mr. A was guided to deposit the amount under the proper head work of account and claim the refund of the remittance of the amount deposited under head interest. Examine the relevant provision. So can be transferred using form GST PMT 09. GST PMT 09. Transfer of enormous deposit under any minor head of a major head or any minor head is same. So this is applicable. Okay. Mrs. ABC and Co. have defaulted in filing the return under section 39 of CGST Act 2017, GSTR 3B for the month of March 2020 within the specified due date. The reason for such delay is attributable to delay in closure of books of March 2020, which have been finalized during May 2020. The GST Common Portal prompted for payment of late fees payable under Section 47 of the GST Act for a sum of 2,000 under CGST and AGST. Accountant of Mrs. ABC and Co. sought your confirmation for payment of such late fee through the balance available of electronic credit ledger for the late fee. Give your guidance in this regard. Okay. But the late fee can be paid through only electronic cash. But the major heads may be cash and credit ledger. But the fines and all will be paid only through electronic cash ledger. Okay. Or principle of unjust enrichment applicable for payment made under GSTS. Principles of justice. Okay. Subhashini is a registered software consultant. On account of her ill health, she did not provide any services during the month of October. However, she had to incur all the expenses relating to her office. She paid 75,000 to various vendors. The amount of the total input tax involved on the goods and services procured by her is 13,500. Out of the total bills paid by her, one bill for 15,000 related to security services available for security for her office, tax on which is payable under reverse charge. Input tax involved in such bill is 2,700. Subhashini is of the opinion that for the month of October, no GST is payable from electronic cash ledger, as she has sufficient balance of ITC for payment of GST and reverse charge on security services. Do you think no, ITC cannot charge for reverse charge payments? No ITC for reverse charge. ITC is applicable only for output tax payer. ITC can be adjusted against it. ITC cannot be used for payment of reverse charge tax. It is used for payment of forward charges. Okay. Shakil is a supplier of taxable goods in Karnataka. He got registered under GST in the month of September 20 20 and wishes to pay IGST liability for the month. Since he is making the GST payment for the first time, he is of the view that he needs to mandatorily have the online banking presence to make payment of GST. Offline payment is not permitted in this. You are required to apprise, schedule, registered the various modus of deposit in the electronic cash ledger. Further, advise him with regard to the following issues. Are manual challan allowed under GST? What is the validity period of the challan? Is gross utilization major and minor heads of the total value permitted? Here, the internet through authorized banks. Bank through authorized banks. So, what in GST read you say it is provided that the cost of electronic can be paid. He has to pay the following notes: internet banking through authorized banks, credit card or debit card through the authorized banks, national electronic fund transfer or real-time gross settlement from any bank, over-the-counter payment through authorized banks. These are the possibilities are there. He has to choose any one of the following, or all the four is okay. Thus, the offline mode is also permitted under GST. Manual or physical challan are not allowed under GST regime. It is mandatory to generate challan online on the GST portal. So, manual challan is not allowed. Each challan is valid for a period of 15 days. Amount entered any minor head tax, interest penalty and major heads of the electronic cash ledger can be utilized only for the liability. Gross utilization amount among the major as well as minor head is not possible. The gross utilization among major and minor heads is not possible. Either you have to use major for major and cash for both minor and major. Okay, I mean payment through bank. What are the main features of GST process? GST payment process. Electronically generated challan from GST number, common portal in all modes of payment, and no use for manually prepared challan. Once you create the challans will be created automatically. You can make use of that one. Facilitation for the taxpayer by providing a hassle-free, anytime, anywhere, mode of payment of tax. You can pay anytime, anywhere. Suppose your business is in Delhi, but you are in Mumbai, you can pay tax in Mumbai also, because you are going to use your GST number for payment. No problem. Convenience of making payment online. This is one of the major feature. Logical tax collection data in electronic format. Faster remittance of tax revenue to the government account. Then paperless transactions, speedy accounting and reporting. Electronic reconciliation of all payments on all slot. That is very, very important. So electronically generated challan from GST. So already told you the payment should be made only through electronic challan. Facilitation for the taxpayer by providing hassle-free, anytime, anywhere mode of payment of tax. Convenience of making payment online. Logical tax collection date in electronic format. Faster remittance of tax revenue to the government account. Then paperless transaction. Then speedy accounting and reporting. They are the features of the GST payment process. Then simplifying procedure for payment, very simple. Then warehousing of digital challan. So they are the advantages as well as features of payment. Mr. Viraj, a registered supplier of service in Bangalore, Karnataka state, has provided the following information for the payment of February 2020. Intrastate taxable supply of service 5,20,000. Legal fee paid to a lawyer located within the state 20,000. Rent paid to the state government for his office 20,000. Received for services towards conducted exam at Lovely University in Rathinasperla, being an interstate transaction. Compute the net GST payable both GST, GST, IGST of Mr. Viraj for the month of February 2020. Rate of GST, GST, IGST are 999. All the amounts given above are exclusive of taxes, not inclusive of taxes. Okay? Exclusive of taxes. Hereafter we have to charge. We have to charge. Okay, you see. So compute what the tax paid. So output supply. You see, these are the output supply. Interstate, value of supply, GGST and GST. 5,20,000 you charge 8%, sorry, 9%, 9% of 5,20,000. This was GST, because this is intra-state. Fees paid to lawyer located within the state. So receipts, this is what this is inward supply. Lawyer inward supply. So 20,000, 9%. Because fees paid means here we avail benefits. So inward supply. This is outward supply. Rent paid is also outward supply. I think inward supply. Inward supply. These two are inward. They are outward. But received from service towards conduct the 60,000 no GST for it, because this is not a taxable service. Then legal fee paid to lawyer 20,000, 1,000, 8,000. Rent paid 30,000. So total tax liability for CGST 51,300, ATST also. The cash paid less cash paid towards tax payable under reverse charge mechanism 4,500, 4,000. When we paid RC reverse charge mechanism, you have to deduct this one, the output tax payable balance. Then ITC no for reverse charge. Then output tax payable 46, net GST payable. You see, the amount available in the electronic ledger may be used for making payment towards output tax. Our tax payable under reverse charge is not an output tax. Therefore, tax payable reverse charge cannot be set up against output tax, and thus they have to be in cash. Okay. Then I think so. Once again, I will repeat this problem. Intrastate taxable supply of service 520. Legal fee paid to a lawyer located in the state 20,000. Rent paid to state. So in this and received. This is one reverse charge mechanism. You see, 4,500 cash paid towards taxable reverse charge. 50,000 totally. Inward supply 50. We have to charge reverse charge for this 50,000. For 9% on 50,000 is 4,000. You see. Okay. This 4,000 is 50,000. 500 is 50,000. And 50,000 plus 30,000. Okay, that's all. This is what payment of tax. So today I'll give a snapshot about the payment of tax. We have to cover section 49, payment of tax and interest, penalty and other amounts. First we have to open an electronic cash ledger. You have to maintain a sufficient balance of this ledger. So you have to transfer the sufficient amount from your personal bank account in the local area. So before that you have to open bank account in the same location, and you have to maintain sufficient amount and also transfer the money from that account to credit ledger. You have to use this ledger for both major and minor dates of payment. But electronic credit ledger can be used only for the payment of major dates, not minor dates. These are the difference you have to understand. And finally, you have to settle through electronic liability register. This is what. But when you use the over-the-counter payment, you have your limit for transfer money is only 10,000. But this limitation is not applicable in the following cases: government department notified person and authorization of proper officer. When the proper officer gives authorization, you may transfer more than this 10,000. This is the decision will be is in your hand. Okay. Then here the taxes are classified into three heads. One is major heads and minor heads. Major heads are all GST payable, CGST and HGST and GST. The components of GSTs are the major heads. Other fines, penalty, fees, dues, taxes, they are the minor. But the major heads will be paid through electronic cash ledger and credit ledger. But the minor heads will be paid only through electronic cash ledger, not in electronic credit ledger. Okay. Then how can we utilize the ITC, the manner of utilization of ITC against the payment of GST? You have IGST. First you have to adjust this IGST against IGST payable. After paying adjusting IGST payable, if you have any balance, that amount will be used to adjust against GGST and GST. But here no priority for adjusting first only GST. In law cannot give any priority, but you may use this one is first and that one will be last. Okay. This is your discretion. You may take a decision regarding that. Okay. Then when you have a ITC in CGST, first you have to adjust CGST, and if any balance available, it should be adjusted against IGST. Then you have any HGST, unit GST, first you adjust against HGST payable, then you adjust IGST, not GST. So the surplus of CGST cannot be adjusted against the amount due for the GST. That is very, very important. The surplus of GST cannot be adjusted against the due of GGST. This is what you have to keep in your mind at the time of adjusting or utilizing ITC for final payment. Okay. Then all liabilities of a taxable person shall be recorded in electronic ledger and discharged through in the following. First, suppose you have a dues for preceding previous year. First, you have to settle the money for that, then come for current and any other payment. This is what very important. The paid due you have to be passed in the on the recipient of the supply. The person who has the recipient, that person should be the paid you collect then return. Explanation already discussed. These are the three important challans you have to be used. Okay. These are the major and minor heads already discussed. But whenever you have to pay, you have to use GST PMT in the following cases. So these are the interest on delayed payment is very important. Whenever you are paying tax in delay, you have to charge 18%. But when you 18% interest, when you give false information regarding excess claiming excess ITC and regarding the payment of short payment of tax, okay, I mean underpayment of tax. So here you have to pay 21% interest. They will charge 21% interest. These are the possibilities of we discuss the problem. Thank you very much, media students. Okay, so I request all of you to watch the video carefully. Okay, and you have any doubts, put it in the chat box. At the time of conducting the webinar, I will clarify all your doubts. Okay, thank you. Thank you very much. Bye. You have to do, first you have to register your business. So then only you can able to adjust ITC and will made the final payment. But without registered your business, everything is not possible. So first of all, you have to register your business, then we'll take all possible proceedings. Okay. I hope all of you understand. So if you could understand properly, no problem. This part is very important. This is also very important. The last part is also see you in the next class. Okay, bye. Bye.